Hello, everybody. Thank you very much for joining. And today we will be discussing about two things. One is how to trade a new strategy using my lines or the levels that I send on the or update on the blog. And number two would be how an EA that I created works and eases our job on a daily basis without having to manually do a lot of things on the job. So let's get started. So as you can see, this is the 5 minutes Euro JPY chart, and this is a live chart right now, as you can see. Uh, what you see on the chart is towards your right top, you can see the EA, which I have created, and obviously it is licensed. It has got certain indicators like the ADR, which is getting automatically updated in real time, the spread information, as well as the next bar information as to how many minutes till it's spread. Other than that, I also use daily high and low line, and this actually is this line that you see over there is showing the high of yesterday. There is another line below this which is showing the yesterday's low. Okay. On the chart itself, we can see it's a candlestick chart, and 20 SMA, 200 SMA, and stochastic. Stochastic has values of 3, 8, 3, and 4, as you can see. And both the moving averages are simple moving averages. You can see that these lines are there and how these lines are getting drawn. I'll obviously be showing you that. Let me go to the H4, that is the 4-hour charts, and you can see all the lines right here. These are the red lines which are saying, talking about the sell TP1, TP2, TP3, and TP4, and this is buy TP1, TP2, TP3, TP4. The two olive lines in the center are the key. If you have been following my blog and the strategy that was discussed earlier, you will understand that these two lines any given day are very critical indeed. This is the buy line and this is the sell line. Now let me show you how this particular EA is attached to the chart. It's a very simple process. Let me first remove this. Alright, let me re-add it back to see if those lines automatically get added from the blog as well as the indicators. These are of course the parameters that are there in the expert advisor. You can change them if you want to, but I just keep it as the default. Click on OK, and it is waiting for the tick. And you can see that all the lines have come back again automatically without you having to do anything manually. So every day when these signals are published on the web, on my blog, these lines will automatically be drawn on each of the pairs. So I can go to any pair that's got the lines, and not the gold actually, gold doesn't have it, but these are the 6 pairs that I give signals every day, so you can see the lines on there. So what the EA does is it automatically basically goes to the blog, gets all the signals, comes back and draws it automatically on the charts along with indicators and other information, as you can see over here. So today we will be discussing about a new strategy that I have developed. Now this has been I've been doing this or testing this for some time now, and you will see how this is going to work. One of the most important things about this strategy is that price has to be above the 20 SMA. The 20 SMA has to be above the 200 SMA. And at that very point, the stochastic has to be below the 50 line, with the green stock line having crossed and looking up as compared to the red stock line. So let's look at this chart today and see if we had got any opportunity for trading since the start of the day. The start of the day is actually depicted by this vertical line, which of course can be set using the parameters in the EA. So let's see if the condition of price above 20 SMA, 20 SMA above 200 SMA, and stochastic at that very point below the level 50 and crossed over, looking up, with the green line having crossed the red line in the stock. Let's see if that scenario has happened or not. These are the three criteria, very important criteria. Fourth criteria is that the qualifying candle, the candle on which the candle on which these three criteria are formed, has to be a bullish candle for a buy scenario. So we are looking for buy scenario at this point, so we are talking about buy scenarios only. So in a buy scenario, the candle has to close bullish. Number one, it has to be above the 20 SMA. Number two, 20 SMA has to be above the 200 SMA. That's number three. And number four is the stock has to be below the level 15 stock, with the stock green line above the signal line and looking up. These are the four conditions. There is another fifth condition to this. The fifth condition is at the point of entry, from the point of entry till the next level, because we are looking at only buy scenarios, so we're looking at higher lines. So in this case, let's say it's hypothetically we are entered over here, then we are looking for only 20 pips of profit. The moment we get a target profit of 20 pips, we exit the market with our profit. That's it. So it's like a 1:1 risk to reward. Stop loss will be 20, target profit will be 20. That's it. Once either one hits, we are out of the market, either with profit or for loss. Today, let's see whether we were able to make profit or loss after looking at these five scenarios. We will only enter into a position, be it buy or sell, if all the five criteria are met. So let's see. The day started from here, and here we have a scenario. You can see that this candle, you can see this candle over here. This candle closed right on top of our line, just on top of our line. But did it qualify in other areas? Let's see. This definitely is a bullish candle. You can see it is a bullish candle, there's no doubt about it. It is above the 20 SMA. 20 SMA is above 200 SMA at this point. You see that? It is above the 200 SMA, as well as the stochastic is below the 50 and turned around, with the green stochastic line above the red. So this candle is called our qualifying candle. So this is the qualifying candle. We have to look at the fifth condition, whether if we will enter on the close of our qualifying candle and on the open of the next candle. So if we enter over here, do we have 20 pips? We have 20 pips. Only then we will enter on the next candle. So in this case, we immediately, when do we make out our calculations as to at what point do we make this calculation that okay, how many pips are there from around about this point, this area, to the next level of resistance. If it is above 20, we should enter on the next candle. In this case, it is above 20, so we enter exactly over there and we get out with our 20 pips over here. That's 22 pips because we'll also take into account the spread. So yeah, so at this point we exit and we got our 20 pips for the day. Next, look at another scenario. If we have any other occasions where we were able to get into, this is definitely an occasion where we could have gone into. You see, the candle is a bullish candle. The bullish candle closes above the resistance line. The candle is above 20 SMA. 20 SMA is above 200 SMA. Stochastic is below 50 and turned around, but the green line has not crossed the red line in the stochastic. So we wait for the next candle. On this candle, the green line has crossed. You can see on this candle, the green line has crossed the red candle and looking up from 50. So at this point, we look for if this candle is bullish or not. We see that it is a bullish candle. It is above 20 SMA. It is 20 SMA is above 200 SMA. Do we have 20 pips to the next level? We easily have. We enter on the next candle. Again, the same principle. We enter on the next candle, we go up, and we take our 20 pips, and we get out of the market. So as of now, we have got 40 pips of profit. Let's see if we have more opportunities in the day. This is another opportunity you can see over here. It is a bullish candle. This candle is a bullish candle. Stochastic is below 50 at that point and turned around. So this is a qualifying candle. 20 SMA is above 200 SMA. Bullish candle. This is a qualifying candle. However, would we go into this particular trade? Remember, this is a similar situation that was presented over here, and we entered. The reason why we will not enter over here, and the reason why we entered over here, even though both those candles were bullish and closed exactly on the resistance line, is because in this scenario, in this case, there were higher highs getting created. You can see this is a higher high, this is a higher high, this is a lower, this is a low, this is a higher low, this is again a higher low. So at this point, it would have made sense for us, with all our conditions being met, to enter. But over here, with all our conditions met, we will still not be entering, only because we do not have higher highs and higher lows getting created towards our left. Towards our left, what we have is a whole bunch of candles going sideways and up and down, meandering along without going anywhere. So at this point, we will not be entering even though all our 5 conditions are met. In other words, you can put a 6th condition into the equation, and the 6th condition would be to see or look for higher highs or higher lows, or lower highs and lower lows getting formed in a sell situation. Or in a buy situation, it's higher highs and higher lows. In a sell situation, it's lower highs and lower lows. So if that is not getting created and the signal is generated, then we will not enter into that trade. So in this case, we did not enter. Although if we had entered on the next candle, that is, it is a qualifying candle, of course. So as soon as that closes and the next candle opens, we enter. We would have got, we would have got a loss. But we didn't enter only because of the fact that a higher high and higher low was not getting created over here on the towards the left. We only see congestion. We see structures not performing anything, just going sideways. So at this point, we did not enter. So these were 3 buy opportunities that got created for the since the morning today, and we are already in profit with 40 pips. And the amazing thing is, these lines, you can see how price is just meandering and consolidating in those lines. That itself, and you can see this happening every single day around these lines. Price will keep doing things and keep meandering, keep consolidating around these lines every single day. You will keep seeing this every day, every single day. And these are not pivot lines. These are lines that I get uh, from analyzing and using that analysis in a particular in-house software which I use to generate these lines every day. These lines are just like, you can say these lines are something that is futuristic, because in the future also the price will go to that level and keep consolidating for you to make your moves as soon as it breaks out. And applying the other criteria that we discussed out of the six, when all six of those criteria line up together, we enter and we make a lot of money. And this happens every single day. The great thing about uh, this particular EA is that it actually manually draws these lines without you having to do it every day manually, which I think is pretty incredible. And I've been getting a lot of feedbacks to get something like this created, and that is the only reason why went I thought I had to create this particular video. And it also made sense because I was also researching on this particular new strategy of mine for a couple of months now, and so it all made sense at the right time to make a video like this, so that you can understand exactly how this particular new strategy that was discussed today can be traded for easy gains that can be made in the forex market every single day without uh, risking too much. If you have any feedbacks, any questions, please do write into my email ID. It's there on the blog. I will be looking forward to it. Thank you and have a great day. Bye bye.